Hello everybody, in this video I'm going to be doing a brief stock analysis for American Express, and this is not necessarily going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company. And also I'm doing a stock analysis video similar to this one on all of the companies in the Dow 30, so be sure to come and check that out if you are interested. So I like to start off these videos by taking a look at the 5-year chart for a little bit of perspective from a longer time period. So if you look at about 5 years ago, you see it was at about $77, and then before March of this year, it was just below $140. So really great growth there, but with a really tiny dividend, and it being a tech company or tech finance type company, I guess you would like to see a little bit of better growth there. And you would definitely see better growth with its peers, which I would say are MasterCard and Visa, as well as a couple of banks, which I suppose they're outperforming the banks right now. But then if you look at year to date, they went down all the way to $67, and they're already back up to $105 about. So if you did get in anywhere close to $67, I'd say you got in at quite a deal. And just glancing at their revenue and earnings, it looks like revenue has increased slightly year over year for the last 4 years, and earnings has stayed relatively steady with a good increase in 2018 and 2019 from the 2 years prior. But if you look at the last 4 quarters, it's a different story. You see kind of a decreasing slope in revenue and just slight earnings in the last 2 quarters, but they were able to stay positive in earnings, which is a huge plus for American Express because a lot of banks are not positive for the last couple of quarters, and probably going to see about the same revenue, if not slightly increased in quarter 3, and about the same earnings as well. And I thought this might be really important to take a look at because American Express is really reliant on consumer spending, indirectly, I suppose. So if travel's way down, transportation, shopping, all of these different industries are way down, and spending American Express is going to be directed. And if you take a look at travel and transportation, those may be affected really long term, as more and more companies realize they really don't need to do quite as much business travel or need to have people flying around the country or coming into the office. So those industries may be affected for many years to come before they return to their peak levels, which will negatively affect consumer spending, affecting American Express. And next up, I want to talk about a few positive points by the analysts at Morningstar here on the Robinhood app. And the first one is that American Express is well entrenched in corporate buying and travel departments and business travel with their go-to. And they're kind of the go-to card for business travel. And with business travel being so down right now, they're definitely being negatively affected and probably will be for a long time. And the next point is talking about their business-to-business payments, which they're doing really, really well in compared to MasterCard and Visa, which are really not in that space very much. So you would have to compare it to banks, in which case they're doing really, really well. And then the last point is talking about how they manage all of the different functions of the payment ecosystem, which means they're vertically integrated and are not nearly as reliant on banks as MasterCard and Visa. And then I want to talk about a couple of bearish points as well. And then on the next slide, I suppose, I'm going to talk about the biggest bearish point. But the first one here listed on Morningstar is that American Express doesn't have the strongest brand, which is definitely true. American Express cards are not accepted everywhere, but that's improving year over year. And then the next point is that traditional banks often have greater scale, offering more customer loans and additional services, which I would actually say banks are hurting right now. So American Express in the future actually may be able to match rewards better than banks are even able to. And then just the last point is that COVID is really, really bad for banks. And the last part there is that banks will get hit hard and there's no telling how bad things might get. And I would actually say we're on the upside of things. We've already reached the peak and we're kind of on the downward slope. So things are just going to get better from banks here on out, although that could be a year or longer, probably a lot longer before they fully recover. And then I wanted to show the research report overview here on Morningstar. They give it 3 out of 5 stars, which is agreeable, I suppose. But the thing I wanted to talk about here is the wide economic moat, and I completely disagree with that. They are in the space and dominant in the kind of business-to-business space and being really vertically integrated with their credit card. But my argument is that MasterCard or Visa could invest, say, $1 billion or so and start getting into American Express's space. And if they committed more capital over time, American Express would be seriously hurting in just a few years. And I would say MasterCard and Visa are in a much better position than PayPal or any bank to get into their space just because they have so much more capital to invest. I make tons of other brief stock analysis very similar to this one, so be sure to come and check it out if you did enjoy. Subscribe for more content, and thank you so much for watching to the end.